Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This is where you get everything you need to know in 90 seconds at 9 o'clock. With news, all eyes today will be on Graeme Wheeler and his latest monetary policy statement. But first, in the US, job openings increased in June and layoffs dropped to their lowest in nearly 2 years as labour market conditions tighten further. The latest update on the US federal budget deficit shows little change from its track to come in well under 3% of GDP, a level they can easily afford. In New Zealand, Fitch Ratings has affirmed our sovereign long-term foreign currency issuer default rating at AA and its long-term local currency rating at AA+. Their outlook for us is stable. They have raised their forecast for GDP growth to 2.7% for 2016 and 17. That's from 2.4 and 2.6% respectively. And they see the current account deficit staying unchanged at 3% of GDP. Housing is a vulnerability, they say, but they like the measures the RBNZ is taking to keep a lid on this. In Australia, RBA Governor Glenn Stevens delivered his final speech before retiring next month, saying Australia's economic recovery can't be achieved through lower interest rates alone. He said government spending had to play a role, as long as it was targeted on projects likely to create jobs and support productivity growth. We can't assume that monetary policy can simply dial up the growth we need. We need some realism here, he said. The speech actually triggered a rise in the Australian dollar. In New York, the US Treasury 10-year yield is lower today at 1.52%. The return on some UK government debt turned negative earlier today after the Bank of England missed its target for buying new bonds in its current bond operation. Gilts maturing in 2019 and 20 are now yielding minus 0.1%. They may no longer be making a yield, but the price gains are what bond investors are after here, and that's what they're getting. Hard to call bond investing fixed income investing these days in some countries. And our own 10-year swap rate starts today at a historic low of 2.41%. And we should also note, perhaps related to that Fitch rating update, New Zealand's sovereign risk rating, as measured by CDS spreads, has fallen to a new low of 23 basis points. That's a drop of half since the start of the year and bolstered the country's financial reputation. The US benchmark oil price has slipped a little more today and is now under $42 a barrel, and the Brent benchmark is just over $44 a barrel. They fell after weekly American inventory data showed that their stocks of crude oil and other petroleum products rose last week to a record high. The gold price is slightly higher again, and now at $1,345 an ounce. New Zealand dollar is higher by more than half a cent from this time yesterday at 72.3 US cents, 93.5 Aussie cents and 64.6 euro cents. The TWI is at 75.2. Check back here at 9 o'clock to see how it reacts to the RBNZ monetary policy statement. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.